Good morning. My name is George Hota. I'm the CEO of Photon Energy. Today I'm sitting here with my colleague, our Chief Financial Officer, Clemens Wormuth, and I welcome you all to our webcast where we'll be presenting the results of the first quarter of 2020 and as well a review of the past periods and an outlook to the future. We have chosen to change the format of how we address investors after quarterly reports. As some of you know, in the past twice a year we used the online chat of SII, the Polish organization representing small investors. But we've decided to upgrade, of course, in these very unusual times. I think many of you have gotten used to online calls and Skype calls and Microsoft Team calls. So if you wish, we're going a little bit with the time, and we believe it's a more attractive format also for investors, and it will also allow us to respond to questions more quickly and interactively. So we'll start the format today with a presentation, and which will take between 25 and 30 minutes. We have about 1 hour's time, so the second half of today's webcast will provide, as we believe, ample room for you to ask questions, which we will try to answer as efficiently as possible. So welcome again. Just a second. Okay. Okay. So this disclaimer you're not expected to read in this short period of time, but it had to be there. So our presentation today will start with an overview of our group and our business model. We of course assume that many of you listening today know the company reasonably well, but we believe it's good that even maybe those who are new to our company get that information, and we're on the same page. Then we'll have a section about the investment thesis. We're going to go through the Q1 results, and we will be in the last section talking about our strategy and the outlook. So just very briefly, Photon Energy has been originally founded in 2008 in the Czech Republic. We have in the meantime expanded to several other countries. Today we are active with various parts of our activities in more than 10 countries. As we'll be discussing later on, a very important part of our business model is that we are an independent power producer, and just recently, after connecting 5 more plants in Hungary, we have grown our portfolio to 60.6 megawatt peak. Another pillar of our business is the provision of operations and maintenance services to the power plants that we own, but also to power plants owned by external customers. And here we currently, also recently, we exceeded the milestone of 300 megawatts. We have approximately 120 employees worldwide. As you know, we're a Dutch company headquartered in Amsterdam, but with offices in several other countries. The largest offices are in Prague and Sydney, but we also have offices in Slovakia, in Bratislava, in Budapest, and in Bucharest in Romania. And our track record is we've by now built over 80 megawatts, so we expect that number to exceed 100 megawatts, which includes our own power plants, but also for external customers. We expect to exceed that later this year. In terms of energy generation, last year we generated almost 44 gigawatt hours of electricity. Based on the growing portfolio, we expect that number to be significantly higher this year. We have been on the capital market since 2008, so we actually listed our shares in the first year of setting up the company, we were actually the first foreign issuer on Uconnect. And in the meantime, we've also listed our shares on the Prague Stock Exchange, and we've also been active on the capital market on the debt side by issuing in the meantime our second bond issue, which is traded on the Frankfurt Stock Exchange and some other stock exchanges in Germany. So we are active both on the equity and the debt side on capital markets. And one of the topics which we'll discuss later on is, as many of you may have seen already, we announced today that we've made a decision to move our listing from Uconnect to the main market of the Warsaw Stock Exchange, also to move from the free market, the Prague Stock Exchange, to the main regulated market there, and also to list our shares on the quotation board of the Frankfurt Stock Exchange. I'll get to that in more detail a little bit later. As you can see from the key numbers last year, we reached 30 million euros in revenues, and at the pre-tax level we're profitable. Given the fact that most of our power plants are very profitable, we had to pay significant taxes, but as an important part of our business model is the construction of new power plants, and these are value accretive. We generated a positive other total comprehensive income, and as you can see also our balance sheet total after the end of the first quarter stands at 138 million. Clemens Wohlmuth will then go into the financial details later. So what makes us quite special in our industry is, first of all, that we have survived the last 12 years in the solar industry, which is very volatile and until now very often has been exposed to significant regulatory change in the various countries, which is something we also had to deal with. And while we are a public company and have been a public company from the early days, we throughout, and today we are a large owner-managed company. So we set up Photon Energy with Michael Gartner all those 12 years ago, and Michael moved to Australia in 2012 and has been building our business there, which particularly over the last 2 years has seen very dynamic growth, and we're also very excited about the prospects, and more on that later. So Clemens joined us, was already a long time ago, and since the end of last year we have our CEO Andre Sedlon to complete the top management team. Our business model around solar power plants is that we cover the entire downstream value chain of the industry. So like many other industries, also solar is divided into upstream and downstream, where upstream relates to all the processes related to the manufacturing of the technology that's used, so panels, inverters, substructures, and this is a part of the value chain that we are not really active in, and downstream is what we cover. So we essentially cover the whole life cycle of value chain, if you look at it from a financial point of view, of a PV power plant. So we get involved in the development of projects, which means we are looking for suitable locations. We secure all the relevant permits, starting with a grid connection, the title to the land, which may be either ownership or a long-term lease. We secure the construction permits and all other permits that may be required. Then we design the systems. We arrange the financing, very often coming in the form of project financing from a bank typically. We build those plants, and that we do either for external customers, where we are basically a so-called EPC contractor, and deliver those solar power plants turnkey, or we build, and preferably we build them for ourselves, where we are then the long-term owner. And as mentioned before, at this point we stand at 60 megawatts of installed capacity that is in our ownership. The division, Photon Energy Solutions, that's tasked with the construction of power plants, is a little bit more active in Australia than here in Europe. So in Australia, we've been focusing a lot on building for external customers, and one particular segment that is providing us with very dynamic growth is the off-grid segment. So we are, as most of you know, we are building a system on Lord Howe Island, which is a true island system, combining PV and batteries together with diesel generators. And we also recently won the tender to build a 3 megawatt plant to power a wastewater treatment plant, which again is island enabled, so it can run without the grid. On the procurement side, we work with the top manufacturers in the world, both for modules and inverters. And on the back of that, we're not only procuring for our own projects, but we are involved in the wholesale and distribution of those key components. And last but not least, the construction with the grid connection of the power plant, the process of asset creation is completed, but then a very long road is ahead of the owner of the power plant. The expected life of a PV plant, if well maintained, is somewhere between 25 and 30 years. So the operations and maintenance becomes very important. And there, over the years, we have gone down very deeply in all the knowledge and skills that are necessary to properly operate and maintain power plants. We've developed our own monitoring software. We run our own control room. We have our own technicians in those markets where we provide these services. And we also have a specialized division taking care of inverters, which are essentially the heart of any PV system. So in other words, we can cover all the tasks from the birth to the death of a solar system, which typically encompasses a relatively long time period. Our two main markets at this point are Europe and Australia, where again we currently have a capacity of 60.6 megawatts, which splits between 15 megawatts in the Czech Republic and 10.5 in Slovakia. Those power plants were built between 2009 and 2011. And over the last 2.5 years, we have added another 35 megawatts in Hungary, and we also own one rooftop system in Australia. On operations and maintenance, we are the market leaders in the Czech Republic, where we service around 134 megawatts, of which 15 are ours, and the remaining are power plants owned by external customers. We are growing very fast in Hungary, where we believe that we also have a fair shot of being the largest independent O&M provider. And we also provide those services to our own and external customers in our own power plants and external customers in Slovakia, to external customers in Romania, and we also service one plant in Slovenia. And there was mentioned the Photon Energy Cardio, which takes care of PV inverters. In terms of project development, the key focus at the moment is Australia and Hungary, but we also have also initiated the process of developing projects in Romania and as well in Poland. So just a more detailed breakdown on our portfolio. And as the generation of electricity is a key pillar of our consolidated revenues, this of course is very important. So looking at 2019, we generated 16.6 gigawatt hours of electricity from our Czech portfolio, generating revenues of 9.4 million euros. In Slovakia, we generated almost 11 gigawatt hours with revenues of 4.3, and in Hungary, we, based on the 35 megawatts that we have now connected to the grid, we expect revenues this year to reach 4.2 megawatts. Sorry, 4.2 million euros. The feed-in tariffs on the Czech and Slovak plants were connected 9 to 10 years ago are significantly higher than what we generate in Hungary. So of course it takes more megawatts to generate €1 million of revenues. But at the same time, of course, the investment costs these days are significantly lower. And here just a slide showing the development of our key activities over the last 3 years and partially year to date. So our proprietary portfolio, as you can see, has grown from 25 megawatts in 2017 to the 60.6 now. We will soon initiate the construction of another 14 megawatts in Hungary, which will take our total in Hungary to 49 megawatts. And as we communicated some time ago an updated goal for the Hungarian market of 75 megawatts, which we want to have connected by the end of next year. And based on the pipeline that we're not, which is not at the stage where we are publishing this pipeline officially, we remain confident that we will be able to hit that number by the end of next year. Electricity generation, as a result of the growing capacity, is also grown quite significantly last year, and the forecast for this year in terms of energy generation, which is based on the real numbers until the end of April, and the forecast for the remainder of the year indicates that we should top 70 gigawatt hours in 2020. What is important to bear in mind is that the capacity, well, the production always lacks the additional capacity. So when you look at our financial results, so of course plants only start generating electricity once they're connected, and it takes some time before that starts feeding into the total revenues of the group. And you can also see that we have been able to kickstart the growth in our O&M business, where we have topped 300 megawatts just a few weeks ago. And the key driver at the moment is the Hungarian market, where on top of our proprietary power plants, we have also been so far very successful in winning O&M contracts from external customers, and that is particularly interesting as those power plants are actually newly built. So we've been able to convince the investor and also the financing banks to take a different O&M provider, that means Photon Energy, than the EPC contractor who built the plant. And historically, those two elements were very often combined and intertwined. But in the Hungarian market, we've been very successful in coming in right after the grid connection of those plants. And looking at the pipeline, we believe that the Hungarian market, which currently stands at 77 megawatts of power plants under management, we believe that we'll be able to grow that dynamically, and maybe next year the Hungarian market may even be more significant and larger in terms of megawatts under management than the Czech market. maybe for the key
maybe I can jump in here.
I'll hand over to Clemens.
Also a very warm welcome from my side. I will guide you a little through the financials. As George already mentioned, we have grown over the last couple of years quite steadily. As you can see, our revenue grew from 13 million in 2016 to 30 million this year into 19, and we expect to top this year. But we're not only growing revenues, also our profitability stays with that quite positive in terms of our EBITDA so far is growing. I mean, you could see in 2019 a little decrease that is because we invested heavily into the further development of our company, into building power plants, as you could also see from the connection figures that we had shown. And this means also that this kind of a deferring, that we have some initial costs already now in the development phase, building up an organization that is capable of delivering these figures. And we will see those revenues and then profitability coming in the future from those power plants only when they're really generating electricity for the whole year. So this is from the general profitability development. Our asset view, or if you look in our balance sheet, we could grow our balance sheet and keep with the growth. Now we have about a little more than 130 million total assets. With the growth, we could keep still our equity ratio pretty stable, around 27% at the moment, end of 2019. So this means we are for sure increasing indebtedness, and we will talk a little more about this later, but in line with the growth of the substance of the companies, or equities is growing or is developing in line with that. So we are not worsening our leverage too much here. This so far to the overall figures, and I will, as I said, in the Q1 figures, then go a little more into detail there. The next point would be our investment. Maybe I give here shortly back to George to talk about once again our value chain. I think it's very important to understand and how we differentiate ourselves towards other companies in that industry and what makes us special.
Yes. So thank you. So again, we cover the downstream segment, which you have on this slide pretty well broken up. And looking at many of our peers, whether they're listed or private, you will see that typically solar companies cover only certain parts of that value chain. So you'll have companies that purely own power plants, and sometimes in the listed form are so-called yieldcos. So they hold those power plants for the cash flows and distribute dividends to the investors. Then sometimes you see companies are EPCs. Very often EPCs have also integrated. So very often they will not only build as a contractor, but they will either acquire or develop projects, build them, and then typically sell to a final investor, like a pension fund or a yieldco or a utility. But I think we believe that our complete coverage of the downstream segment, and particularly the high and the strong focus on the life cycle, that means on the operation maintenance, including our own control room and software, are unique. So there are actually not that many peers that have this complete coverage, which on one hand also adds complexity, but at the same time it gives us a lot of flexibility. That means we're of course open to cooperate with partners or customers on only certain parts of that value chain, but we can also provide a fully integrated service, and what is important, across several markets internationally. Looking at it financially, each of these business lines also has a the financial parameters and dynamics of each of these business lines is very, very different. So, for example, an external EPC contract that we sign, but also, for example, the distribution of modules are singular transactions, which may tie up our capital for a certain period of time, but there's a clear beginning and clear end. If we buy and sell modules, that can be just a matter of hours or days. In case of an EPC contract, it may be a few weeks or months. But they're singular transactions, and basically you constantly have to chase new business. The margins are relatively slim, but of course it is a business worth being in. Whereas electricity generation, that means the construction and ownership of power plants is very capital intensive, as is also obvious from our financial statements. We use, just like most investors, extensive leverage, but that leverage is taken on against relatively well predictable, stable cash flows, and they provide, of course, the bedrock of our business, that we have cash flows that are relatively well predictable many years into the future. As long as we take care of the operational maintenance of these plants, and we make sure that they run properly. Of course, we cannot influence the weather, but we can influence the preparedness to produce. But it provides very stable and predictable revenues for the long term. O&M again is built on medium to long term contracts, and the numbers are much smaller, but it is a business very similar to facility management and real estate, where we again have very well plannable revenues and cash flows coming from a multiple of external clients. So we are our exposure to single clients is very, very low. Then we have project development, which again very similar to project development in real estate, is an activity where you have to put in a lot of work, deploy some capital. That capital, of course, is at risk, because not all projects once starts always come to an end. Although our historic success ratio is very high, but if you manage to get a project fully permitted to the ready to build stage, typically there was a multiple of what you had to invest in terms of capital outlay and work invested. And for us, that is very important, because whoever controls the project rights also then controls everything else. That means who will build, how you finance those plans, and who will operate them in the long term. So basically, across the value chain, we have various types of, from a financial point of view, various types of businesses, and our core focus is on growing the long-term revenues that are stable and that are recurring, like the energy generation and the operational maintenance. Of course, we want to see all our business lines growing dynamically, but the bedrock, and also during the sometimes difficult times over the last 12 years, that has been the element that has allowed us to weather some of the fluctuations in our industry. So can we move to the next slide, which is
maybe I can take over here the financials. Thank you, George. Yes, let me first tell you what basically happened in the first quarter of this year. What we did, we started the year with a portfolio of 51.7 megawatt in our proprietary portfolio for electricity generation. We could add another 5.4 megawatt. These were 8 power plants in the region of Tata in Hungary to our portfolio. So we connected those, even though this was difficult during the impact of the coronavirus. but we managed to maneuver through that and got it connected. On top of that, so we ended up basically end of the first quarter with 57.1 megawatts. On top of that, we could connect just recently at the beginning of May another 3.5 megawatts coming from 5 projects on 2 locations in Mai and in Kuzsent-Márton in Hungary as well, that we own at the moment 60.6 megawatts of PV capacity. That we also can see in the electricity generation, the growth of our proprietary portfolio. If you look in the figures, and here we have already put in there not only the Q1 figures, but also April figures already, so that you can see how much we grew there. So from 11.5 gigawatt hours for the first 4 months in 2019 to already 21 gigawatt hours this year, which when you look in our reports and look at the feed-in tariffs we get for those power plants, you can roughly calculate what that means in terms of revenues for the future. This is on our proprietary portfolio. On top of that, we could also grow our O&M business. We had at the beginning of the year 267 megawatt peak under O&M, under management. We signed additional customers for 33 megawatts in Q1. Also here, I'm very proud of our team, of our sales team, that during these difficult times of Corona could still deliver this, make these sales and provide services to our customers, which has happened uninterrupted during the whole period so far. So taking those figures, what does this mean for our financials? If we look in the result, and there I'm very proud to present those figures, because it was a record-breaking first quarter for us if we compare it with other first quarters. And as you might know, our business is quite seasonal. The electricity production in Q1 and Q4 is much lower than during the summertime in Q2 and Q3. However, if we compare quarter by quarter, it gives you a quite good picture of what is the real growth in the company. So we could grow our total revenues by 26.6% to 5.3 million euros from 4.2 million last year in the same period. That growth went through to gross profit, where we as well have 27% growth to 3.3 million euros. We had a little higher operating costs, but still ended up with a record-breaking EBITDA of 1.4 million compared to 1.1 million in Q1 2019. So from an operational point of view, if I look at the operational figures, the first quarter was, again, in these turbulent times, very successful, and we're very happy that our business has not been hit on the operational side through the Corona crisis. However, if we go down to the bottom line, we will see that there was an impact as well, or that there is an accounting impact. But before that, maybe we go from EBITDA more down to profit, to the EBIT and the profit after taxation. So our depreciation, naturally, by adding more power plants, is growing as well. This is a long-term depreciation of the power plants during the life cycle. And our financial expenses grew as well, even though they look here that they grew from 900,000 roughly to 1.8 million. It looks quite dramatic. In reality, let's say, liquidity or cash-wise, the interest expense grew much less, and I will show you this in the cash flow later, because there is also some revaluation of derivatives included in that figure that was negative in the first quarter, even though it is a non-cash related accounting entry only, and it will not in reality hit our business. So that would, in reality, profit after taxation would look a little more positive in terms of less negative, as you can see here. On the other side, also by connecting the new power plants in Hungary, in Tata, we realized other comprehensive income on the revaluation of our power plants according IAS 16. That is about 2.1 million positive impact. Unfortunately, so we would have ended up with a positive total comprehensive income from the operational side. If you look at these figures, on the other side, we had a negative, quite significant impact, which was caused through to just revaluation differences from the currency side, since part of our business is coming from the Czech Republic in Czech crowns and Hungary in Hungarian forints. And those two currencies during the end of March had a very negative impact. Basically, they were weakening a lot towards the euro. We have in accounting, we had to reflect that in the values of our balance sheet positions, both on the active side and the passive side. However, the net effect is minus 4.7 million. Here again, it's really important to point out this is a unrealized loss. It is a non-cash impact, so it's a pure accounting figure that already after, in the meantime, since the Czech crown and the Hungarian forint have strengthened again towards the euro compared to the end of March, is already partially compensated in accounting. So this is about the P&L. If we look in our balance sheet, we will see as well some positive effects and negative effects here. Positive, I mean, we could grow our fixed assets. Let's say the asset base has grown, as you know, as you could see before from the connected power plants. However, the value here again coming from the revaluation based on the Hungarian forint and the Czech crown decreased, plus depreciation would have been a minor effect. So it's a pure accounting decrease here, the minus 0.5%. Our current assets went down as well. This is partially our cash position went down from 15 to 9 million. This is we invested in power plants. Our work in progress went down, as you can see, and trade and other receivables, which is mainly a seasonal effect, decreased in that first quarter. This is if you compare with previous years. I think the same effect we have always in the first quarter. On the other side, on our liability side, non-current liabilities decreased quite a lot, 5.2%. Here as well, we did not repay that much on our liabilities on the bank loans. I will show you in the cash flow how much this was. So it was not this 4 million, as you can see here, from 37.5 to 33.8 million, but a little less. However, revaluating all the local currency loans, so we refinance our power plants with local banks in the Czech Republic and in Hungary in local currencies. So at the valuation of this at the 31st of March, this had, from this point of view, a positive impact on the balance sheet, on the liabilities. Total equity was basically shrinking here again on our accounting side only due to the unrealized losses from the currency revaluation that I just explained before on the P&L side, from 37.8 to 33.5 million euros. However, we remained a strong equity ratio, which is still 27% respectively for our bondholders, where we consider the interest-bearing debt on this calculation. It is still above 30%, and the limit for the bondholders that we guarantee is 25%. That's about the balance sheet roughly. If we go into the cash flow statement, what happened in this first quarter, and I think this is very important to see. If we look at the profit or loss from our company, which is adjusted by non-cash items, we would have had a clear profit of 950,000 euros compared to 1.1 million in Q1 2019. We had a change in working capital, so basically a decrease of receivables, not as big decrease of liabilities, short-term liabilities. So the net cash flow from operating activities thus is 1.1 million or 1.2 million minus compared to 1 million last year. Again, this is something I think which is for the first quarter an expectable value, since the working capital always is decreasing in that time. On the other side, we have invested a lot by connecting power plants and continuing to build power plants. So we invested 2.2 million. That money flew mainly into Hungary, into those power plants we're building there. This was in the comparable period last year, 1.5 million. So even though there was this pandemic, or is this pandemic out there, we have been even more active than a year ago. On the other side, we had cash flow from financing activities. This is basically the repayment of loans, and you can see before we saw that the liabilities went down by some more than almost 4 million. Repayment of borrowings was about 900,000. This is long-term borrowings on the level of the SPVs of our power plants, and we are repaying this according payment plans over a period of normally 15 years. So this is in line with that. Our real interest expenses that we had to pay were 1.2 million. If you compare this with previous year, 1 million, so the increase is not that dramatic as it looks in the P&L on the first view. However, if you add all this up, the change in net cash was 5.3 million. So this is what we invested in Q1 altogether, bottom line. We also, and this is maybe something which is not in the financing cash flow yet visible, because we have secured financing for the newly connected power plants. However, the drawdown of the financing with the local bank, which is K&H Bank in Hungary, has only happened after the reporting period, so we don't see this positive cash inflow here. So we spoke about income statement, balance sheet, and the cash flow. So our cash position at the end of the reporting period, end of Q1, was still very sound with 9.7 million. So compared to 7.8 million a year before. Again, this is related to the increase of the bond financing we secured, plus the local bank financing in Hungary for the power plants we have connected. Partially we have drawn down last year additional funding from connected power plants. So you can see that we are still in a very sound position for our future growth plans that we have now in the upcoming quarters, where we continue building power plants and connecting them to the grid. Our shares and our bond, George mentioned already a little about it before. I mean, we got, as you can see, the financial markets got hit heavily at the beginning of the outbreak of the COVID-19 in Europe. So also our stock, which beforehand was trading very well and developing very well, got hit by this and went down to basically 3 zlotys. However, we could quite well recover. We haven't made it wet yet, the whole decrease, but we feel comfortable that with the development of the markets, plus our continuous development of our business, investors will very soon realize that our stock has its value. The same with the bond. The bond was trading very stable above 105, 106, even 107 was the maximum before the outbreak. Then it dropped with the market significantly below 100 even. It has recovered steadily, and this is above 100, 101, 102 trading at the moment. So we are quite optimistic that we will recover from that. And that's also something we wanted to, being on the financial markets, having access to financial markets from a financing point of view is a very important part of our financing strategy. And this is also why we announced today that we are looking for a main market listing on the Warsaw Stock Exchange. So we would upgrade from New Connect there, the same on the Prague Stock Exchange, where we are trading in the unregulated market today, and that we aim for a listing on the quotation board in Frankfurt afterwards, once we have a main market listing, to also give Euro investors the opportunity to invest in our share. This is a step we take to widen the possibility for investors, because several investors are not able, respectively are not allowed to invest into stocks on the unregulated market. So therefore we want to offer the opportunity that we go on a regulated market, so that also those investors have access to our shares and will increase liquidity, plus to give investors the opportunity to invest in euro currency if they are not willing to take a currency risk from the Polish zloty or the Czech crown. That's about the share. Maybe I can hand over to George again about the outlook.
Maybe I would also like to add something to the Q1 results. Our Q1 results historically have always been a painful moment during the year, because simply by the fact that the generation of energy is a key pillar of our total income, total revenues. And most of our power plants are in Europe, and the production is seasonal. So very generally speaking, 15% of the annual production is produced in Q1, 35 and 35 in Q2 and Q3, and the remaining 15 in the last quarter. But the majority of our costs are fixed. So that being, of course, both the operating costs, so whether it's rents or salaries or cars, but of course also our financing costs. So the interest is spread evenly. The results in Q1 are always look very, very weak, and we always have this impact that the profitability takes a hit. Of course, this year with the moves in the forex markets, and this is, if you wish, the tax on our company reporting in euros. If you were reporting in Czech crowns, that effect wouldn't be there. But as reporting in euros, and the two currencies in which we have the majority of our assets have declined against the euro, we of course had to take, we basically had to take that hit, which again is non-cash, which we believe and hope is probably also temporary. So it's quite likely that some of it we may unwind again in the coming quarters. So it's really an element that will introduce some level of volatility in the going forward as our asset base grows. And I mean, I think there are many businesses in the world that have this issue, that they report in euros or dollars, and but have assets all over the world, and currency markets move, so they have to take also reflected in their income. With respect to the derivatives, which of course had a smaller impact, maybe just briefly explain how that happens. When we finance power plants, we typically fixing the interest rates for somewhere between 50 and up to 100% of the financing volume for 7 to 10 years. So we enter into derivative contracts, and as in the last couple of years, interest rates have been falling. The interest rates we fixed at the time of financing are typically higher than where they are today. So while falling interest rates are good for new projects that are coming in, we actually have to revalue those derivative contracts that we have entered into in the past. So the declining interest rates of the past is leading to this effect, which again at this point in time non-cash. I mean, those power plants pay the interest rates that have been locked in at the time when they were financed, and that's whether that maybe our Czech or Slovak portfolios 8, 9, 10 years ago, but of course now also it will affect the Hungarian power plants. So these are non-cash items, but they can be quite significant and then have this impact in our P&L. So basically this year we really have the fact that it's the weakest quarter of the year, plus this effect which have combined to a picture which at first sight of course doesn't look very, very appealing. But I think what we believe is much more important is the fact that we have We have been able to generate and grow our other business lines, generate additional revenues, and have grown our top line, improved our EBITDA. And while still incurring on the cost side, pretty much the same costs that we'll be incurring in Q2, Q3, when our power plants, and Q4, but in Q2 and Q3, our power plants will be generating 70% of the annual revenues. And particularly the energy generation is that part of our activities that gives us the highest EBITDA margin, where we are north of 90%. We also published our monthly report for April this morning, so this is also why we included the numbers in this in the presentation today. And basically, April has been, well, by far the best April ever, and it's actually so among the best months we ever had. So basically up there with some of the best Junes and Julys in past years, which so in April alone, our now expanded portfolio has generated approximately 2.4 million euros in revenues. So just to also put it in context with our Q1 revenue. So that was April alone, and now we're really entering a very important part of the year. And given that most of the other costs will remain unchanged, given the fact that we're actually traveling less than we used to, maybe they'll even be lower, and therefore the picture will definitely look fundamentally different once we'll be reporting the Q2 and Q3 figures. Of course, one way how to smoothen out the seasonality would be to look at our 12 months trailing, which I think some investors have also been doing. However, they will also underestimate our performance as we've been adding new capacities just recently, and that capacity that is adding high margin revenues is not reflected in there yet. So the 12 months trailing looking back is underestimating the revenue potential that we have already locked in by bringing those additional megawatts online and now having a 60 megawatt portfolio. So I think that's an important comment to make. What I would also like to add is this currency revaluation impacted the equity value that we have in our projects, but we are very careful and always make sure that at the project level, our debt is always in the currency in which we generate the revenues. So we had to, of course, reduce the asset, the carrying value of the power plants, but at the same time, our liabilities expressed in euros also declined. The difference being the equity value of the projects, and that got hit by that number, which admittedly at first sight doesn't look very nice. But again, it's non-cash. We are very happy with the portfolio that we have. I think it's also the other last takeaway before we move on is if you look into our monthly results, when you look at our portfolio, I mean, the plants in the Czech Republic and Slovakia are already now 9-10 years old, so they're not the youngest, but particularly in the last 2 years, where of course the weather got better, the performance has actually been going up. So those power plants, although they're 10 years old, are performing really well and above original forecast, and quite dramatically so in some cases, which again I think is a testament to first the quality with which we built them 10 years ago, but of course at the same time the quality of our operations and maintenance, so that our technicians are able to keep them really in good shape and maximize the availability of those power plants. Again, we can't influence the weather. All we can do is make sure that the power plants are ready to produce as much as possible. And I think that's something we are really succeeding in. So, strategy and outlook. So in the Czech Republic and Slovakia, we do not expect to add any capacity in the foreseeable future, simply because There's no support mechanism in place, or not an addressable one. And also, if we look at the possibility of building power plants, to either sell into the market or based on corporate PPAs, these two markets are not really the most attractive at this point in time. Hungary has been a good market for us. So this year we will for sure go from the 35 megawatts to the 49, based on the 40 megawatts we are planning to build in Pushpuklanen. Again, at the moment we're not disclosing any additional pipeline, but of course there are projects that we are looking at acquiring. Here I think it's important to note that with respect to the communication of our pipeline, we are extremely conservative. So we are essentially only report projects that we have locked in. It means where we have a near certainty that we'll be able to monetize them. We also have done some benchmarking and seen that some of our peers, listed peers in particular, have a more liberal and of course qualified but liberal way of presenting their pipelines. So they're also showing early stage and medium stage projects. We are currently reviewing our policy. Maybe we will also enter into this, make our way of reporting more comparable to our peers. So there is definitely there's more pipeline in the background. Whether some of this will still come to the point where we can build and connect those plants still this year, that means in 2020, or it will be connected in 2021, is to be seen. But those 40 megawatts will start constructing soon. In Australia, we currently own slightly more than 100 kilowatts on the rooftop, and as those of you observing our company for a long time know, we have a project that is ready to build from a permitting point of view in New South Wales, in Leeton. It's actually 2 power plants with a combined installed capacity of 40 megawatts, where we have made, I would say, substantial progress towards financial closing, and our objective remains to build that power plant and add it to our portfolio. I believe that there may be some progress that we can report relatively shortly. We have also initiated project development in Romania and Poland. Just a few words on Romania. We have been providing O&M services in Romania since 2014, and really 6 to 9 months ago we started looking for projects. Our approach is to build from scratch, ideally. So we are reviewing a few possibilities to acquire projects, but our main approach is to really develop, go out, look for plots of land, ask for the grid capacity, which is the cheapest, not the fastest, but the cheapest way, and providing the highest value uplift. Romania is a market that as a country that until very recently was a net exporter of energy, but about 12 months ago became a net importer. Of course, across the board, not only in Romania, but across Europe now with COVID, the situation has changed. So demand for electricity has fallen, also prices. But structurally, we believe that Romania is an interesting market. And as power plants will be phased out, coal and nuclear, and the country industrializes, we see the energy consumption is going up, and we believe it's an interesting market for us in the medium to long term. Which takes us to Poland. We have made the first steps towards the Polish market, and that has taken the form of bringing in so far a team of 3, where the main focus is on kickstarting our project development activities, where we are, again, our focus is to identify locations, secure the land, ask for the grid capacity, that means develop from scratch, which will take some time to mature, but we believe it is the best avenue because it will also allows us to properly select the land that we'll be using. So we have reviewed a lot of projects over the last 3 years in Poland, and very often the plots are, badly shaped, and so if to put it simply, the quality of project development, but of course it's a learning curve for everybody in every country. The quality is not really what we would completely hoped for, and secondly, our interest is most likely going to be on larger projects than what's being developed. While we have not completely excluded it, but our focus will most likely not be so much on the development of projects for the auctions, which still happen this year and next year. We simply believe that those 1 megawatt projects, with all the constraints attached, does not allow us to build the most efficient power plants with the lowest cost of energy. So our interest for utility scale projects in Poland developed in-house is probably going to be focusing on larger projects, multiple megawatts, to reap the economies of scale of building larger sites. And I mean, what is also obvious from our quarterly report, we've established 3 entities in Poland. So we have put the legal structure in place. As I said, we have a team of 3, and we are working on increasing our activity level in the Polish market. And besides utility scale, we are also looking at other segments of the market. I think it's pretty well known that in Poland, SMEs are paying some of the highest, if not even the highest, energy prices in Europe, definitely in Central Europe, and there's definitely potential to address that market and to develop solutions. And of course, we hope that our step to move to the main market on the Warsaw Stock Exchange and our growing commercial activities in Poland will lead to I would call it fruitful interplay. So the fact that we're listed on the main market will hopefully help our commercial activities, and vice versa. Our growing commercial activities in the Polish market will also support the perception of our company in Poland. On the next slide is an overview of the main projects that are currently ongoing. So I'll start in Poland, where we have won in consortium with a local partner tender to build a 950 kilowatt system at the sewage treatment plant in Janno. And I've also seen one of the questions being posed is a status update based on the contract is for the construction, but we are also tasked, the consortium, we were tasked with work on the permitting, on the construction permit, and of course the situation around COVID has led to certain delays. This is covered by provisions in the contract, so the grid connection will be somewhat delayed against our internal schedule, but it should not be dramatically. So we are probably looking at a delay of some in the region of 2 months. But of course, it will also depend on how quickly the measures will be reduced. But we are very confident. I think in Hungary we have shown that even during the Corona crisis, and of course there was also a partial lockdown in Hungary, we have been still able to build power plants. We shipped the modules that we used in our 2 Kunstenmartin projects after the lockdown in China, which took about 3 weeks. So the key components were sourced after the Corona crisis in China. They came more or less in time, and we managed to complete the project. We had to use different subcontractors, so not a Romanian subcontractor we use local normally, but we took a local subcontractor in Hungary. That took about 1 or 2 weeks to sort out. So our team is very capable to circumnavigate, even for the construction of power plants, the difficulties that the measures taken in this corona pandemic have brought up. So we moved to Hungary, where we have the 14.2 megawatt projects in Pushpokládon. These are 10 projects with 1 megawatt grid connection each, and I think we expect commission Q2 is a bit too optimistic, so we are looking at a commissioning in Q4. That's a mistake in the presentation. We will start construction still in Q2, but the commissioning will be in Q4. So we are currently finalizing the bank financing, and we have already started the process of ordering key components. Then we have moving to Australia. We have the 14 megawatts in Leeton, which I already mentioned. We are working, and I think we're ready to close to complete the financing. And on that basis, we are confident that we can still build and connect that plant before the end of this year. What is important is that we are planning to build this project on a merchant basis. That means we don't have at this point a power purchase agreement in place, but we'll be selling both the electricity and the green certificates that the power plant will generate until 2030 into the market at market prices. And on that basis, we've also found a lender that specializes in these type of projects, and so we are able to get even such a project financed. As the situation develops, of course, we are always free to sign power purchase agreements, maybe for a short period of time, maybe only for part of the production volume, or we may also be able to hedge our exposure, our pricing exposure in the Australian energy market, which in that respect is very developed. So there's a lot of tools that will allow us to maximize the value of the income stream from those power plants and the value of the asset. Then I'll start with Lord Howe. So that project is under construction. I mean, this is a project that we are particularly fond of because it is a really cutting-edge technical solution we're providing there, and we are. I mean, it's highly visible. Given the pandemic, we don't have the full capacity of people on the island, but only about 50%. So that will slightly delay the commissioning, but again, it's nothing dramatic. And in the contract with the customer, we have a force majeure clause which covers this delay. So the work is going a bit more slowly than anticipated, but it has not been halted, and that is very important. And last but not least, we have won again, from our point of view, a very interesting tender for 3 megawatt PV system to power a wastewater treatment plant in Victoria that is off-grid enabled. So while the wastewater treatment plant is connected to the grid, it is together with diesel generators capable of running off-grid in a case that the grid supplied energy is interrupted. And then I would also like to comment on a very important step we've taken in April, and that is to invest and also enter into a strategic partnership with Raygen, which is a company based in Melbourne, that has developed a novel approach to combining PV and concentrated solar in the PV Ultra technology, which manages to generate electricity and harvest heat at the same time, and then store the heat and electricity in hot and cold water pools, which then later can be used through so-called organic Rankine cycle engines to produce electricity on demand. And these systems can run both on-grid but off-grid or off-grid. So this allows an off-grid location to function 24 hours a day without the need for batteries, and allows to store the electricity generated from the sun during the day to be deployed at night. The big advantage is that the energy storage, the energy can be stored for extended period of time. So batteries today, and that situation will probably not change in the foreseeable future, are well suited for short-term storage, so up to 4 hours. That's what typically batteries are very useful and used. But whenever there's a longer-term need, like for example, turning solar energy into a 24-hour energy supply, they're not really economical and will not be for quite some time. And this is where Radiant comes in. And if that site is grid connected, it can also provide very valuable grid support services, and which opens the way for additional revenue streams, so not only from the sale of electricity but also from supporting the grid. This technology will work in sunny locations, so we need at least 1,500, ideally 1,800 and more kilowatt hours per kilowatt, so per square meter in year, which is not what we find here in Central Europe, but in some parts of Southern Europe, of course in Australia, and some parts of Latin America, North America, the Middle East and Africa, but also in Asia. So our role is to identify projects where we ideally also act as an EPC contractor and may also come in as an equity investor. From our point of view, this is one of the main future directions that solar will take. And what we're also doing is we're looking at additional uses of this and applications of this technology. And I think what I can say at this point is one of the directions is using the PV Ultra system for water desalination. So we're looking at pairing that technology with water desalination, and given the fact that water is an issue globally, there's more and more parts of the world where water desalination is becoming a major topic, and there's a lot of investment happening not only in the Middle East, where there's a long tradition of using that, but there's more and more water desalination happening in the US, in Australia, in South Africa. So pretty much everywhere where there's a shortage of water, desalination is becoming a topic. Desalination is energy intensive, and here we believe that the Radiant system can offer some exceptional economics. So that's also a direction we are taking, and using solar energy directly for the desalination is one of the really promising areas at the moment, to desalinate water using renewable sources rather than oil or gas, as has been the case to date. Maybe we should also not forget our co-development with Canadian Solar in Australia, which has progressed quite significantly. As you're aware, we managed to exit 2 projects out of the 5 where we teamed up with Canadian. That's Suntop and Canada, which have provided us with a very significant return on our original investment, which was a few $100,000 and a lot of work, and which leaves us with 3 additional projects, Santop 2, Gunning, and Merivale, where we are currently looking at various scenarios with Canadian Solar, how to monetize these projects, and these discussions are, we continue developing them, but the monetization, for the monetization of these projects, there are multiple scenarios, and these discussions are currently ongoing with Canadian. And then we have Barongal and Carrick, where in the case of Barongal, we exited those projects, that project to an industry buyer at the end of the year, where those projects are at a much earlier stage than the 5 Canadian solar projects, and the agreement we entered into provided us with a relatively small upfront payment. The development to the ready-to-build stage is handled by the buyer, and once the project is ready to build, there's a more substantial additional payment we are due to receive. And in the case of Carrick, we've also signed an agreement with the buyer. The transaction has not closed yet, but it's hopefully a matter of days or weeks. And the structure is very similar. So there'll be some payment now, but then a more substantial success fee once the new buyer or the buyer of the project, the new owner, brings those projects to the ready-to-build stage. So there's still some cash flows we can expect from those 2 projects in the future, but they're off our books. Or in the case of Barongal, they are. It is in the case of Carrick, it will be very, very soon. So what remains is to sort out the last remaining 3 projects with Canadian, and that's ongoing, as I said. But so far, all 3 projects are promising in terms of the permitting. So we have so far not had a complete. Well, there was one project that we stopped, but that was then replaced by Santop 2, as the location in Santop gave us the possibility to develop a second project. So the success rate in getting projects either across the line or moving them substantially along the development path is very encouraging. So I guess we're now done with our presentation, but what I would still like to do before and I can see there's quite a few questions have been asked, before we start answering them. I would also like to comment again on our listing. I can actually answer one of the questions which is asking for a time frame. So today we have made the decision and published it today. We have secured the signed agreement with the professional advisors to help us, which is mainly a legal question at this point. Again, we are not raising any capital at this point, so we're not offering any shares. So this is purely a change of the listing, and the driver, as Clemens already explained, is to essentially remove 2 barriers that we have identified or basically bumped into in the past when speaking to equity investors, and one of them, and it was mainly in the context of the Polish market, was the fact that a lot of the institutional investors could not or did not want to invest into shares listed on Uconnect. So a relatively significant group of investors that essentially physically were not able to buy our shares, even when they wanted to. And the second limitation has been historically that investors from the Eurozone, so for example, when we were placing our bonds in Germany, there was interest in the equity story, but for reasons which are probably cultural, a lot of the investors, when they found out that they have to buy our shares in zlotys, it became too exotic for them. So it's maybe today's interconnected world sounds very inefficient, but this is basically something we have been running into. So we have seen the need to address that with a listing on an exchange that allows investors to trade our shares in euros as something very important. And the idea of this exercise that we announced today is to remove those two barriers, increase the investor pool. Of course, that will also be accompanied by adequate investor relations activities. And again, we firmly believe in our story. We also believe that the financial results will show our progress in due course. That means the next 2 quarters, I think, will then provide a much more convincing picture. And we simply want to make sure that the potential investor pool is significant enough, or is as large as possible. And we believe that this step and the 2 important elements are moving to the regulated market in Warsaw and at listing in Frankfurt will address those two blocks that we have. Good. So we have here a list of questions that have been asked. So we will try to address them swiftly. I think the last one on the time frame we've answered. The time frame. I think it's fair to say that it may take around 3 months to get this process finished. So what has to happen is we have to draft the prospectus that has to be filed with the regulator, which in our case is AFM in the Netherlands. That prospectus will then get passported to Poland and the Czech Republic and Germany probably, and forms then the basis for the process of moving our shares to the respective markets. So 3 months is a good estimate, but it may be slightly shorter, end of summer. So end of August, maybe early September is a good guess. So a run through the other questions. So one of the questions I can see is what are the main items for the increase of cost of sales and operating costs. So the cost of sales, very, very briefly, as I was explaining earlier, when you look at our consolidated figures, you look at the sum of different businesses with different dynamics, and in each quarter the mix of our revenues is a slightly different one. So for example, if you look at energy generation, there we have a gross profit of the gross profit margin is north of 95%. The EBITDA margin is north of 90%. So one euro of revenues there is highly accretive and incurs very little cost of sales. Whereas when we do EPC or we trade modules, our gross margin is somewhere between 3 and 7, 8, sometimes 10%. So let's say on average 5 to 6. And so if we book revenues in that segment, then of course the cost of sales goes up. So I think it's looking for a predictable relationship between our revenue growth and so the gross margin or the cost of sales related to that will be a relatively difficult exercise. So it's basically composition of our revenues, and on operating costs, we have been expanding our teams. I mean, I've mentioned that we have added our capacity on project development, also new markets. We have strengthened our team in Australia. We have strengthened our top management team. But I think very generally, I would say that with the cost base that we have today and also the employee base, we can handle a lot more business. So as our business grows, I mean from own power plants to the O&M and construction of power plants, the operating leverage should start working better and better. And of course, we are constantly looking for ways how to optimize our costs. But the operating leverage, we believe, will be visible once now the power plants we have just connected start contributing, and obviously we're not done yet in adding additional power plants. So as we grow our portfolio, that will be much more visible, which I hope also partially will answer the question about losses we're reporting now and what are the perspectives going forward. The next question is on the credit policy of banks for new projects. Essentially, the impact has been very low. I think in general, investors understand that solar power plants, once they're connected and generating revenues, are very stable assets. The revenues are to a large degree uncorrelated with capital markets. Then depending, of course, what the revenue model is. I mean, electricity prices have fallen now, so there's some correlation with the general economy in such extreme cases as today. But the beauty is those power plants have very low operating costs, so you continue generating cash, positive cash flow, even if there's an economic downturn. So investors are very interested, and I think what we rather see that more and more investors are interested in the asset class, renewables and PV in particular. And from the banks, we see continued interest in financing projects. And for them these days, renewables are, I think, much safer than most other sectors, including real estate that they typically provide financing for. The cost of financing, so the willingness is there. The cost of financing, of course, has two elements. It's the wholesale cost, the cost of money, which has been going down, and if central banks continue their way, they will probably keep falling and become negative. And then is, of course, the margin, the credit margin we have to pay to the banks. The credit margins are more or less stable from what we've seen, also now during the Corona crisis. So it depends on the market situation, but they are typically between 2 and 3%. And the wholesale cost, including the long-term fix that we have to enter into, are at the lowest point in history. So our industry, of course, benefits from low cost of funding, and that is the case at the moment. And I think at the moment it's not really foreseeable that would change anytime soon. So to answer the question, yes, bank financing is cheaper than the coupon we're paying on our bond, but of course that financing is ring-fenced financing only for the projects themselves and against the revenues that those power plants are generating, whereas our bond is a corporate bond at the holding level, where of course investors are also taking the additional risk of the risk of the total group. Then we have a question on the FX differential between the fact that we have bonds in euros and our assets in non-euro countries. Yes, of course, that currency differential exists, but at this point in time, first of all, our euro bonds are repayable in more than 2 years. Then it's also important to note that we are using the proceeds of this bond as investment working capital. So we have now invested a lot in the construction, which now we're refinancing those projects. That money is coming back, and of course, as the repayment draws nearer, we will look into ways how to handle the refinancing of our bonds. I think here it is important to note that we have invested a lot of effort in building up our credibility on the capital market. We issued one bond, which we repaid in early 2018. We have a clean history of paying our coupons. We have been very open in communicating with our investors. We have repaid the first bond, which has given a lot of confidence to our bond investors. And the story that we told investors, or our intention that we communicate to investors at the time when invested, I think is very much in line with what we're delivering now. And this is why we believe that when the time comes, we will be in a position to secure additional financing. And I mean, let's not forget, we want to grow our business. So, I mean, we're absolutely confident that we'll have the access to capital to handle the repayment of the bond. And of course, the move to the main market is also something that will further raise our profile. And I mean, as those of you following us for a longer period of time know, we take the communication with our investors very seriously, and this is why we believe we're so far over the last 12 years always been able to secure the funding we needed, whether that's at the corporate level or at the project level. And the asset class, renewables and solar in particular, is one that's viewed positively. So we are very confident that there will not be a major issue with our outstanding bond. Okay, so very last questions. Well, I'll take two. So yes, it will be possible to sell shares on all of the markets where we listed. There is a settlement issue relating to transferring shares from Warsaw to the other markets, which I suggest you discuss with your broker. So it is possible, but not completely simple. So it takes a little bit of preparatory work, but we know that some investors have done it. And then there's a question of on the construction costs of 1 megawatt. That's the relatively easy one to answer. So again, it depends on the size of the project, but if the plant is several megawatts, so you have certain economies of scale, you can hope that you should be able to build in the vicinity of 500,000 euros per megawatt, maybe slightly above, of which modules will be around 200,000, 210,000, again, depending on what you take. And then the rest adding up to about 500,000, or maybe slightly more. It also depends on the cost of grid connection and so on. The other questions are very difficult to answer. What is the cost of debt? I think I answered that to some extent. So it will also always depend on the cost of the wholesale cost of money in that given country. The credit margins the banks take will be somewhere between just below 2 up to 3%. Operational maintenance of a megawatt, again, will depend on the country, and the size of the plant will be somewhere between 5 and 8, maybe 9,000 euros. It again depends on what it includes. And the IRR will then be a function of the selling price of the electricity, the cost of the project, the cost of the land, and also the production. So, but let's say if we take Poland as a scenario, if you look at purely the market prices, and you can build efficiently in Poland, I believe that the revenues per year from electricity to the cost of building a power plant should be somewhere in the region of 10%. So that very crude cash yield should be able to reach 10%, maybe even slightly more revenues. So you have to deduct all the costs against the pure investment cost based on current market prices. And again, a PV plant, well built, well maintained, gives a 30-year, is a 30-year asset. Okay, very last question. Photon water technology. Well, photon water technology is developing. It's providing services, and all I can say at this point is that a lot of focus recently has gone into further developing and deploying remediation technology that has been developed by the team in water technology already for quite some time, and we've set up for this a new subsidiary, which probably become an additional division, and we see very significant potential in this technology to be applied. We already have a few pilot projects that we have concluded over the last 2 years, remediating some sites in France, Switzerland, and China. And we are currently working on certain pollutants that offer very significant global potential. But that's something that I believe we will communicate when the time comes. And I believe we'll be able to do that in the relative near future. So on that basis, we would like to thank you very much for your attention, and of course we remain open for to receive further questions, either within this platform. I've seen one of the questions has also been whether we'll answer questions sent by email. So the short answer is yes, but of course we will not provide answers that give any additional information or fundamentally different information than what we communicate to all investors, as we have to treat all investors the same.
I think the transcript of this Q&As and the presentation will be made public available.
Okay, so thank you very much for your attention. I believe that as today's experiment has, except for the one connection problem, interruption has turned out reasonably well. So I believe that on our side we are motivated to continue this forward during after our next quarterly reports. So again, thank you very much for your attention, also for your support. I hope that we've been able to put into context the Q1 results, which had a few numbers which at first sight may not have looked that encouraging, but we are. It's a set of a combination of seasonality and forex effect, both of which are temporary, and that should be visible in Q2. And I believe that we'll be using this format not only twice a year as in the past, but I guess we'll be doing these webcasts after every quarterly result. So on that basis, I'm looking forward to our next webcast in approximately 3 months from now. So in mid-August, which hopefully will be a very
around the main market listing.
Around the main market listing, and hopefully in the middle of a very sunny summer. So thank you very much, and I hope that the current inconveniences we all experiences will come to an end very soon, and it will be able to enjoy the holiday season with as few restrictions as possible. So thank you very much again, and have a nice day.
Goodbye.